Every B2B SaaS company falls into one of two buckets. They're either horizontal SaaS or vertical SaaS. And massive businesses have been built in both categories. But over the course of my 170 or so investments, I've picked up on some key differences that make one a better fit for bootstrapped and mostly bootstrapped founders. In this video, I'm going to look at the upsides and the downsides of the two business models, explore which type sells for more, and if you stick around till the end, I'm going to introduce you to a third type of SaaS you've probably never heard of. So grab your coffee or an Irish stout and let's dive in. I'm Rob Walling. I've started 6 companies, 5 of them bootstrapped. I've written 4 books on entrepreneurship, and I've invested in more than 170 startups. Let's start by defining horizontal SaaS. Horizontal means your tool or service is applicable across various sectors. So examples of that include a lot of the communication platforms that we use, productivity tools, project management. Examples are things like Slack, Basecamp, Zoom, or e-signature platform Signwell, scheduling software SavvyCal, and podcast hosting software Castos. All of these serve a function that are essential in a wide range of businesses, and they don't focus on a specific niche market or industry. Vertical SaaS, of course, focuses on a specific niche market or industry. Examples could include SaaS built to manage a dental practice, or a CRM built specifically for realtors, an application to track legal cases, or project management for building contractors like Builder Prime, they're a TinySeed company. Vertical SaaS focuses on depth rather than breadth, so they solve complex, industry-specific challenges. And vertical SaaS, more often than horizontal, tends to be more integral to the running of a business, so they tend to not be nice-to-haves, but things that you really need. So when comparing the two, I have to speak in some generalities, but in general, horizontal SaaS will have larger TAMs. This is total addressable markets. This just means the market size that you can serve with horizontal is usually bigger. And this is intuitive, right? Because if you're going to build a CRM for any business versus a CRM just for realtors, then the odds are that the total addressable market of just realtors is smaller than every business in the world. Now, in general, horizontal SaaS can have higher churn rates. Not always, but it's a slight lean. But I'd say all other things being equal, when you have that vertical SaaS that a business relies on, you're going to have lower churn than horizontal SaaS. Horizontal tends to be a little more generic, right? General purpose, maybe undifferentiated. And oftentimes there are a lot more options that people can switch to. So therefore, there's less churn versus if you're competing in the dental space or for hair salons, there might only be 2 or 3 software products that cater to them. And lastly, horizontal SaaS tends to involve constant innovation and fierce competition. Because the markets are so large, there's a lot more funding involved. There's a lot of venture capital entering those spaces. Thus, they tend to be more competitive. So with vertical SaaS, the total addressable markets tend to be a little smaller, but you know what? They can still be massive, right? You can still have a $50, $100, $300 million total addressable market, even within a tiny little space. And as a bootstrapped and mostly bootstrapped founder, you have to ask yourself, how much revenue do I need to build a successful company? It's probably not hundreds of millions of dollars. Speaking based on my experience looking across 170 investments, our vertical SaaS companies tend to have lower churn overall. And again, it comes back to that maybe lack of competition, there's more differentiation, and these vertical SaaS pieces tend to be more ingrained in the business, thus harder to switch away from. And as you know, when you have lower churn and high switching costs, it's easier to achieve one of the cheat codes of SaaS, net negative churn. I've defined net negative churn in several previous YouTube videos, but the 2-sentence explanation is it's when you add 0 customers in a month, but your revenue grows. Imagine that, negative churn. Because of expansion revenue, because of people paying you more each month if your pricing is well architected and well designed, you actually get expansion revenue that can lead to your churn being negative. It blows your mind if you've never heard of it before, but it is a SaaS cheat code, and the best SaaS businesses in the world have it. I want to pause for a minute to chat about Monday.com, who are very kindly sponsoring this video. When folks ask me about starting their first SaaS, I typically recommend they build an app or an extension on top of an existing product like Monday.com, which already has 186,000 customers across more than 200 industries. 90% of their largest paying accounts have at least one app installed, which is why I think there's a lot of opportunity to build a SaaS on top of the platform. If you aren't familiar, Monday.com is a versatile platform that enables business owners and teams of all sorts to streamline their work using their work management, sales CRM, and dev products. They have an app marketplace where developers like you can build and charge good money for apps that extend the functionality of the platform. To learn more about the types of customers you might find in the marketplace, their team has put together an ebook that lays out their core user groups, the job titles they'll often have, their pain points, and use cases for the platform. This is a treasure trove of customer research laid out for you, and you can get it for free. To get your copy, head over to the link below to fill out the form and sign up for a developer account. Thanks to Monday.com for sponsoring this video. Let's get back to it. Okay, so as I was saying earlier, many investors, dare I say most investors, tend to focus on horizontal SaaS because they want these huge total addressable markets, or TAMs. But when they do this, they often demand faster growth, and they have the winner-take-all mentality because they need centimillion or billion-dollar outcomes. Now at my fund, TinySeed, we've tended to focus more on vertical SaaS. We still invest in horizontal, but vertical has tended to be a better fit for what we're looking to do in the companies we're trying to fund. Plus, we also focus on a third type of SaaS that I'm going to talk about in just a couple minutes. So you're probably asking yourself, which is better? So if you want to go public or you want to go after venture capital, you probably want to go towards horizontal software. It's better due to the massive TAMs and just the ability to grow very quickly. But if you want to grow to say 2 to 20 million in annual recurring revenue, maybe it's 2 to 30, whatever your number is, sell for 10 million to $100 million, I think vertical SaaS in general, not in every case, is easier to grow and it's easier to sell. There are more acquirers who want to buy something with net negative churn. It's like I said in my very first book, Start Small, Stay Small. You don't have to be the best marketer in the world. You just have to be better than your competition. And when you're in a vertical niche, your competition tends to be less sophisticated and have less funding than in the big horizontal markets, so it can be easier to compete. In a second, I'm going to talk about a third type of SaaS you've never heard of, but it's another type that I think is a really good opportunity for bootstrappers and one where I've invested a lot of money. Before I do that, I have a book out. It's called The SaaS Playbook. The SaaS Playbook includes all my up-to-date thinking on how to build an incredible, mostly bootstrapped SaaS company. You can get the book at saasplaybook.com or on Amazon. And if you've already bought the book, I'd really appreciate a 5-star review wherever you can. The book has sold more than 21,000 copies to date, which is actually quite a lot for a self-published book, and it's still selling about 800 copies a month. I'd really appreciate it if you could either buy a copy. I think you'll get a ton of value from the book if you haven't read it yet. And now for the third type of SaaS. Have you heard of orthogonal SaaS? I would guess not, because I made that term up last week. But orthogonal SaaS is the term I use. Anar hates the term, by the way, my co-founder. But orthogonal SaaS is the term I use when you build for a horizontal market, but you focus on a single title or a role within an organization. So examples include horizontal tools that focus on individual titles, like SEMrush and SEO testing, that focuses on the role of a marketer in a company. Apollo and Find Email, they focus on salespeople, SDRs, BDRs, and AEs. Then there are HR tools that can be used at any company, but they focus on the HR department, like Jazz and CodeSubmit, or even developer tools like GitHub and StatusGator. Any company in any industry can use these tools, but you know exactly who your ideal customer is, or at least your buyer and user within any organization. It's a nice advantage to know who your buyer is, and I'm seeing a lot of success with folks building orthogonal SaaS in the MicroConf, TinySeed, and the broader Bootstrap community. If you could start fresh and pick one of these 3 types of SaaS to build, which would you choose? Let me know in the comments. And if you're in that early exploratory phase of starting a business, you might be wondering where to find great business ideas, whether they're vertical, horizontal, or even orthogonal. In this next video, I lay out the 7 ways to find profitable business ideas. Thanks for watching. Please give this video a like if you found it helpful. And if you aren't subscribed yet, I hope you will. I'll see you next time.